Good morning, traders. I am filming this video early morning after this crazy week in the markets. What a crazy move from SPY, huh? That was absolutely insane. If you were here this week, congrats for not blowing up. And if you did blow up, I'm sorry, but it happens. And I hope you can come back from that. But just what an insane week. Look at that. Only for the market to call Jerome Powell bluff and then the market just to rebound like this. But anyways, just an insane week. This is a special video, guys. I want to put it all together for you guys on this one. I also want to let you guys know that I have the sniffles. I do have a bad case of allergies. So if you guys hear me sniffling, now you know why. And I'm also drinking my coffee while I'm at it. So, you know, hear some background noise. Now you know what it is. But if you guys follow me on X, you guys have seen me post this before. I promote my book right here, Unlocking Fibonacci, a Powerful Swing Trading Guide. This is my book right here, Freddy the Fish. I'm the author. Sells for 35 bucks, guys. So for those of you guys that bought it, just like I promised you, I was going to try to make weekly videos to clear things up even more for you and just give you some extra ammunition to really get you to learn how this all ties together, guys, and how powerful this thing really is. For those of you guys that just stumbled on this video, I think you're in for a treat. So today I'm going to highlight Pfizer, and this has nothing to do with any kind of fundamental studies or nothing like that. I don't care for the company. As a matter of fact, I don't like the company only because of the whole COVID thing and all the jabs and the all the shots and everything. But that's besides the point. I'm here to make money, and so are you. You're also here to learn how to trade the stock market, how to lay out Fibonacci, and how to identify when big money's moving in. So for this video, I'm going to combine both. I'm going to try to make this video a little shorter than the rest, while also not taking away from it. So here is PFE. This is Pfizer, and what you see I have is a quarterly chart. So I have it set to max quarterly. So this goes all the way back to what you see on the screen, excuse me, right now, is the year 2010. Part of the book, at the intro, I write that you have to go back far enough if you're going to try to learn how to lay out Fibonacci correctly. So here's what I mean by that. For Pfizer, to get the right Fibonacci golden zone, you need to go all the way back to 2010. Plain and simple, okay? Now as a recap, I'm not gonna lay out the Fibonacci, it's already on here. But if you're brand new to laying out Fibonacci, especially the way I lay it out, here's an example right here. You want to have these measurements: 23.6, 38.2, 50, 61.8, 70, 78.6, and 88.6. My book talks about that. 70 and 88.6, two very unknown Fibonacci's. I have rarely came across anybody that ever mentions any of those two. But after trial and error for a long time, and I mean years, I discovered that they're a valid sequence. So, with that being said, to lay out this Fibonacci after you have the correct sequence programmed into your curves, you're going to lay out the first anchor down here in the month of April 2010, this red candle, to the high of 61.71. On that one, you were going to eliminate everything and just keep the 50, 61, and 78. I also talk about that in my book. It's all in there, guys. Okay? So there's that right there. The next Fibonacci retracement you're going to lay is going to start from this low right here. And this is from the, I think, July. March, April, May, June, July. Yep, July of 2011. You're going to lay that from that low to the high, 61.71. Connecting it to the high is always the easiest. Where all the traders get tripped up is finding the correct lows. So for the start, we're just going to use these two right here, okay? Now, once you get that, it should look something like this. So if you see we have it on the quarterly, the bigger the time frame you have it on, the more clear the picture begins to form. So that's how I add this right here, because now I know exactly if the whales are going to buy, I know where they're going to buy. And we can see the golden zone is right here at 23.64 through 25.59, which If you think about it, guys, the quarter ends pretty soon. So if you hover over right here, the next quarter begins 2025, right? This quarter began July, this quarter began October. So October, November, December, January. We have about 9 days left, or 10 days left in this month. It is highly likely that this candle is going to close something like this, showing us that indeed they are buying the dip right here. See, this is very clear, guys. Look at this. This is showing us right here that 1, 2, 3, 4, 5 quarters in a row they are buying the dip. How do we know this is a valid dip? Because they've bought it in the past. Look at this, guys. They've bought it in the past. So it's confirmed dip. So if you're a longer term investor, if you're looking to add value to your 401k, whatever kind of retirement portfolio you buy into, this would be a great name to add right here, because you are getting it at a cheap price, 26 bucks a share. And you know that if it slips down here, you're going to go into the 23, 25 where they're constantly buying, and you can even add more if you wanted to. But anyways, that's how you discover the golden zone. Now, in my book, if you notice right here, I'm going to bring it up one more time. It says a powerful swing trading guide. Find the smart money, trade with the whales. Okay, there's a reason why I put that there. I didn't just mumble jumble words together. The reason I put that there is because smart money sits in these areas, guys. This is exactly how smart money trades. They may not lay out Fibonacci, and they may, I have no clue. They may have very complicated algorithms that automatically detect these levels and just trigger buy programs. But guess what? I have discovered how to manually identify these zones with a free tool that is usually free for everybody, including you, unless you trade maybe on Robinhood. I don't know if they have these kind of tools, but I know your E-Trades, your Charles Schwab's, TradingView, all these major trading platforms, they all have Fibonacci. It's free, guys. Why? Because it's not fancy. It's not complicated. Well, actually, it is very complicated, but it doesn't attract too many people, right? Everybody wants those very complicated indicators. And yeah, they're fun. But realistically, guys, they're very hit and miss. All right, so now we've identified the golden zone. Technically, we could already take a trade. We already know we're buying, risking off this zone holding right here, and we want to sell into these zones right here, right? But that's not why I made this video today. I want to make it even better for you. So we're going to zoom in a little more. All right, we're going to zoom into the weekly chart now. So you can see on the weekly chart, once again, the whales are confirming they are buying the golden zone, my golden zone, the golden zone that I speak of in this book that I sell for only $35. All right, check us out. There's a 1 week confirmation right there. There's another week confirmation right there. This is going back to 2023, guys. They've been buying this since 2023. Here's another candle confirmation, 2024, April. Another one right here, 2024. Here's another one right here, right, 2024. And then they kind of, marked it up a little bit, but they're not quite ready. They're not quite ready to just let this thing rip. They still got to fill orders, guys. This is how hedge funds, this is how your activist investors, this is how they fill the orders. They constantly just let it hover around this area, and they just keep filling the orders quietly. This is what's called creating the base, right? It dips in right here again, November 2024. They buy the dip. For the last 5 weeks, they buy the dip again. So right now, these whales are in what's called accumulation mode. But when do they turn into markup mode? When do they just allow this thing to rip, right? For one, they have to have their order completely filled. Number two, they usually wait for some kind of catalyst to trigger. Usually that means earnings, or usually that means some kind of news event, some kind of worldly event, something that really puts the name of the stock they are buying into the spotlight. In the case of Pfizer, I really don't know what it is, but stick around, check it out, look what I'm gonna show you. So let's say we wanted to take a trade right now and try to make some money off this one right here. Now keep in mind, this video is not financial advice. Do not try to sue me. I don't have crap for you, all right? All I have is a book. Okay, so check this out. We're gonna go even further now. We're gonna add one more Fibonacci. There's a move, right, that happened from here to here. So that's what we call a wave. we can now apply Fibonacci retracements to this. So we're going to edit this. We're going to get it exact. The low on this candle is 24.48. So the begin value is where we began. The end point is where we finished at. So the end value, I just told you, is 24.48. It's already on there. Now the begin value, we hover over it, we can see the high of this candle is going to be 31.54. And if you're wondering how I see that for all you new people, after you hover over the candle, right here it tells you the values of the candle. So if you pay attention, if I hover over it, it says the high, 31.54. That is what matters right here. So we're going to change this value to get exact 31.54. Now we're going to set it. So now let's zoom out a little bit. So if we took this trade, I know that my stop loss is right here. Okay. So I'm going to clear this up a little bit for you. All right. So now I have to find my nearest supply zone. The nearest supply zone is where all the current sellers are sitting at, because they're going to be the first ones to put a damper on this trade. Also too, if a move were to happen on Pfizer from this level, it's going to shoot up straight to the first supply zone. That's my strategy, guys. That's his whole book. It's just literally capturing the first move when the stock moves from here to the next supply zone. And in this case, if you notice right here, this next block right here has a lot of orders. See this? So if you follow me on X, now you know how I get these colors, and now you know why I have these colors. Blue stands for buyers, purple or whatever color this is, magenta, this stands for where the sellers would be at. Sellers are going to be at the supply zone. So if I'm looking to take this trade, all I'm trying to capture is from here to here. All right, now we're going to zoom in a little more to the daily chart. Check this out. So I'm going to add those Fibonacci's back. I want to show you something. Okay, this is what we call the bulls in action. Check this out. So the sellers dropped it all the way down right here into the zone, right? But we already know there's a golden zone, so what do buyers do? They defend the area and they buy it back up, right? Sellers trigger more sell orders, but the buyers, now they're saying, you know what, we're done buying down here. We're going to start defending up here. So this is what we want to see if we're going to be buyers, guys. We want to see buyers get busy. We want them to move up and start buying at higher prices. And we want them to start pushing at the same time. So they push up right here, right? Sellers try, and then buyers push up again. They're saying, no, we're not backing off. We're going to try to break this. And look at what they're trying to break, guys. They're trying to break through the Fibonacci $26.15 line. That's why Fibonacci is so important. So sellers try it one more time, and buyers say, no, we're here. We're actively buying, and we're going to push it up again. You see this? This right here is what you want to see if you want buyers. If you want to be in a trade that has buyers, you want to see the buyers actually behaving like buyers. A lot of you guys that trade, just trade in general, the stock falls right here, and you're like, oh, I'm buying the dip. But you didn't know if any of this was going to happen, guys. Sometimes you don't know if these buyers were going to go all the way down here to 22 because they didn't find value in here. So once again, in my book, I talk about this. Confirm before you enter. Confirm. Don't just guess. A lot of Fibonacci traders are just guessers. I teach you how to go away from guessing. Confirm that they're actually there at that level. All right. So anyways, going back to this sequence right here. This right here shows buyers that are very ready to push this to the next higher level. So check this out. If they're going to make the move, right? Look at the volume. They are buying. This is greater than average buying. That's what this means right here. See how right here there was greater than average selling? That happened, but they weren't able to crack the Fibonacci golden zone. That's actually a bullish thing. Now, after multiple days of sellers trying to push through here, the buyers are saying, we're not backing off, dude. Therefore, this leads me to believe that buyers are trying to make a move happen from this zone, and they're going to try to carry the price up to this zone right here, the 2801 through 2884 area. So therefore, that allows me now to take a trade, whether that be common shares or whether that be options. If you follow me, you know I'm just a strictly option trader. So here's the other part to the video. All right. So without all this, right, just this right here is enough, guys. This is right here is enough to show you what the buyers are trying to do. We identify the golden zone. We see constant bullish action. They're really defending and they're trying to push. We have greater volume right here. By the way, this is all in the book. Now, when you have an extra layer of confirmation, the trade gets even better. I'm about to show you. So here's a screen. This is a screen from my unusual whales, one of my unusual whales filter. All right. One of my filters caught this right here. It caught a large trade from Pfizer. They're trying to buy calls for the 28 strike that expires in 62 days. They bought everything at the ask. If you look at the volume, they bought 25,600. Well, that's actually just the volume. They bought 15,000, right, contracts. The open interest is 12,000. So they bought a greater amount than the open interest. So we know that this is a bullish trade. It tells you right here this is a bullish trade. We know 96% of this order was filled on the ask side. And if we click on it, we can see right here, we can further confirm, right? This chain had 12,000 open interest. And look at that, the volume was 58,000, right? So going further into this, this tells me this is part of an alert. We can even click on that. And here are the orders, guys. Look at this. See all these orders, right? This could be all the same trader, by the way. Sometimes these whales have such large orders that what happens is they get peppered in everywhere. And you can usually tell it's the same whale because they'll buy the same exact price, but it'll be like just a ton of orders. See, so I can probably say this is all the same whale right here. Everything is at the ask. 28 call. That's where they're targeting, guys. A 28 call. Guess where this Fibonacci tells you the stock would move if the move were to happen? 28 area. You see how that works, guys? Now the whales that they see this move happening, now the whales are actually flooding money into the trade to make the move happen. There's a $750,000 trade right there sitting, targeting the $28 zone. And this move is expected to happen by February of next year, which in my experience, the move's gonna happen much sooner than that. This move could happen this week, next week. It usually doesn't take that long for the move to fill. So I hope you guys can see how this Fibonacci works, how it shows you where big money's sitting at. And once you identify that, guys, once the whales identify these moves, that the price is sitting in a Fibonacci zone, like this right here. See this? Once they identify this, then what they do is they just come in and light the fuse. That's all they do, guys. They come in with large money like this, a huge order with a premium of $1 million, and they help the stock make the move to the target. I hope you enjoyed this video. I hope you found a lot of value because this video does have a lot of value in it. Give me a like, give me a comment, follow me on Twitter, on X, and just follow me if you want to learn. I'm not really here for picks, guys. I'm here just to give you an education. I hope you guys have a good weekend. I'll see you for the next video. See ya.